Yo, what's up, everybody? Welcome back to another YouTube video. It's been a long time, of course, like 2 months or so. So I do apologize for that, but I think this will make up for it. Probably going to be one of the better videos that I put out for you guys, and I think it's going to be a real game changer for you guys. It's something that I really wish I had when I was first learning how to trade. You know, so much noise out there, so many people to learn from, so many concepts, no structure, but that's what I'm trying to be for you guys, you know? I'm trying to be the guy that just provides everything you need to know. No BS, right? All for free. I don't want you guys to go, you guys don't have to go pay for education, right? You don't have to join, you don't have to pay me anything, right? I don't need your money, okay? Um, yeah, I'm trying to, provide everyone a quality education because I think that's what people deserve. Um, and yeah, I've been screwed over many times, man. I've been unprofitable for like 3.5 years before I even made $1. And I've been through all the mentorships, all this and that. So I'm trying to provide clarity education for you guys, so you guys don't have to go through that, right? So let's go ahead and begin, and let's start this lecture. So what this lecture is gonna be about is about essentially continuation. So I just call it the GxT universal sequence. It's essentially using gaps for continuation. We're gonna go over gap selection and really just from the top down. It's a complete approach, like it's a mechanical approach, and that's what you need. You need simple framework to go over, right, or to follow, and that's what is the hardest part, right? It's how to put it all together. It's how to build a framework, and then how to build off of that, etc., and follow each step. So like that's what this video is about, and that's what it's going to provide. And yeah, that's what my whole model is about. I try to make it very simple and mechanical as possible and logical. And yeah, so let's go ahead and get to it here. So this is gonna be a long video, by the way. I have a lot of slides here and quite a bit of examples. Like it literally might be over an hour long. But like I said, I don't try to BS my videos, no edits. I try to put as much information as possible. I want you leaving this video, with no questions, no feeling of like, what am I missing? No, you won't be missing anything. I'm not leaving anything out here really. So that's why it's so long. I want to provide as much examples to drill into your head as possible. So that's what we're going to do here. So strap in. It's 2 a.m. in the morning for me, by the way. So I'm cooked, but it's all good. So let's start now. So universal models. What is a universal model? So this is what was taught by the MXM trader. It's essentially a framework, right? And we always need a framework. A framework is essentially price going from point A to point B. That's all it is, right? It's a key level to a draw on liquidity. So our first framework, or universal model, the word universal, meaning that we can apply to any time frame. It's fractal, right? Just like anything in trading, it's all fractal, right? So here is where we trade into a key level, right? And this is where we can actually anticipate a reversal. You can't anticipate a reversal until you hit a key level, right? So once you hit a key level, we look to the opposing side of the range that caused the retracement, which is the external range high, as our target, right? So as you see, price trades into the fair value gap or internal range liquidity. Those are the same thing. You're gonna see me interchange those words. It's just how the verbiage is. Whoops. But yeah, so price goes in internal liquidity and trades to external liquidity as our targets. So the next universal model or framework, again, those are the same thing too, is when price trades into ERL. This is where price is going to reverse and trade back into IRL, which is essentially back into the range, right? And that's what we're going to be targeting, right? Very simple. We're going to try to fly through a lot of the simple stuff. We're going to start from very simple framework stuff, and we're going to show you guys how to piece it together and really how to go from basically point A to point B in a mechanical process, okay? So how to trade a manipulation range. It's essentially where price trades into a range low, right, or a swing low, manipulates it, and we expand into the opposing side as our target, as you see, right? Price trades to the range low, reverses, we target the range high. Really simple stuff, nothing too crazy. Now this is also really simple, but we're still gonna go over it. So what is a C2 closure? When do we apply it? So we apply swing formations to key levels. So basically our framework, so highs and lows and gaps, to confirm reversals, right? So the market cannot reverse without a swing point. So therefore we confirm reversals with swing points and catch the expansion, right? So after a swing point forms, expansion follows, expansion away from the key level towards our target, right? So that's the framework. So the first type of swing point, there's 3 types that I use. Shout out to T-Trades. He's the one that really popularized this here. So candle 2 closure is simply where price fails to close within candle 1's range. This hints at a reversal. What happens after reversal? We expand, right? So once price expands, we're from C2 low. If we get a strong close above C2 candle's high, right, body closure above that C2 high, then we can anticipate a continuation in candle 4. So what is a C3 closure? It's where you don't have a C2 closure, right? Maybe you hit a key level, but we don't have a C2 closure, so you don't know if price is gonna reverse until we get a C3 closure. So you're gonna wait for price to actually form that 3 candle swing formation, and the mechanical process is for validating this candle 3 is when it closes over candle 2's opening price, okay? So you wanna be trading candle 3 here or candle 2 because these are not valid swing formations. You're gonna trade candle 4 when you get a valid candle 3 formation or closure. So C2 reversal to expansion, this is the third sequence, not sequence, but swing formation. This is the same thing as this here, where candle 2 hits a key level, but it's the wick size. It's a difference in wick size, right? If this candle has a small wick, it can reverse into expansion. And we can trade this reversal candle. And we do it every day, really. If you're trading a reversal profile for GxT, that's what you're trading. And yeah, it has to hit a key level, obviously, though, because we can't anticipate a swing formation or a reversal if we don't hit a key level, right? So we're going to then, once we have the closure, we're going to mark out our first level of invalidation. Okay, so we're always going to have an invalidation to a trade idea. Okay, so step 1 is a universal model, right? Once price trades into that key level, then we confirm it with a swing formation. The next step is to then set an invalidation to that trade idea, right? So that would be equilibrium of the previous candle, basically. So if the previous candle is a reversal candle with a large wick, you're gonna mark out the whole wick, okay? And for an expansion candle, what things do we have in common with an expansion candle? What are expansion signatures, right? Shallow retracements, right? Which exactly what expansion candles form, which is a small wick, basically. It's just a lower time from shallow retracement, okay? So small wick is an expansion signature. If you look at all expansion candles in the market, they all have these small wicks. So that's what we're gonna demand. And that's gonna be a filter for price for us to engage with, right? So this is where we would expect candle 3's wick to form, is in the upper half of the previous candle's range, basically, right? So if price hits equilibrium here, that would be an invalidation, because if we hit equilibrium here, that would form a large wick for this candle 3, which would be an invalidation. We don't want to trade a large wick candle, right? We want to trade expansion. I keep saying it right. That's like a habit of mine. I don't know why, dude. Sorry about that. I see like comments about that. I'm like, dude, that is so bad. But anyways, so once we have a strong previous closure as an expansion candle, we mark out the whole range. Right? We don't mark out the wick, obviously. Mark out the whole range, and we want to see the upper half of that previous candle's range basically form the low of candle 4. Okay. So now when you put it all together, this is essentially what we have, where we must hit a key level. Then we just confirm it with a swing formation, right? One of the 3, doesn't matter. So here you can see that we hit the key level, but candle 2 does not close the candle 2 formation, as we don't close back within candle 1's range. So What do you have to wait for? A candle 3 closure, okay? If you don't get a candle 3 closure, then you don't trade at all. You need a new swing formation, so you'd have to like sweep out this low, right? So like if price doesn't form this closure here, it's gonna form this low, which is a key level, so you have to wait for that to get swept and wait for new swing formation, by the way. So just wanna put that out there. But yeah, once you have a valid candle 3 closure, now we can trade candle 4. So what do we do? Mark at equilibrium of candle 3's range. And again, we want to see the upper half being respected, as that is our invalidation point. That would be internal to external. Let's get into external to internal with a candle 2 closure confirming this reversal. So as you see, we close back inside of candle 1's range. So then we can anticipate candle 3 to expand. Where should it form its high? Within the lower half of the previous candle's wick range. What about over here, where candle 1 hits the key level? If it doesn't reverse, then we would anticipate the next candle to reverse off of the previous candle's low, because obviously if this candle didn't reverse, we must create a reversal candle to reverse price. As long as it has that small wick, we can trade it, okay, that reversal into expansion candle. Now, if you're going to trade continuation, you want to have a strong close here, ideally. Yeah, you measure out the whole. If actually closes an expansion candle like this, you mark out the whole candle, right? And you want to see, obviously, again, we're repeating the same things, but it's important. You want to see C3's wick or low being supported by the upper half of the previous candle's range and expand into our external range high. So now we're going to get into key level refinements. So this is basically going for our first invalidation, which is the upper half of the previous candle's range in a bullish scenario like this. Now we're going to look for a refined key level, because this is quite a large range to be an invalidation level, obviously. So we're going to look for a key level within this range, because obviously, we know it should form somewhere in this upper range. So we're going to look for a key level within that, vicinity of the daily open, because it has to have, it has to basically be that fair value gap, because if it's a fair value gap down here, it's irrelevant, because if price comes all the way down here, what are we creating? We're disrespecting EQ first off, and we're creating that large wick. Okay, so this is kind of a way we can pick fair value gaps. Okay, we want close proximity fair value gaps to the opening prices of higher time frame candles. So you see this gap here? This would be an alignment. So here's the alignment here. If this is a weekly candle, and we want to trade a continuation week, basically, we're going to look for a daily gap within the previous week's range. If this is a daily candle, we're going to look for a 4-hour gap. If this is a 4-hour candle, we're going to look for an hourly or 30-minute gap, so on and so forth. Okay, it's all fractal, and we're going to do the same thing across all time frames. You're going to see how repetitive this gets and how fractal this is. It's kind of crazy. So what do we expect this next candle to do? Our bullish candle, we want it to open low first, right? So as you can see, that would be the protraction phase of the daily candle, which forms the wick. So that key level is going to reverse price, or reverse the candle basically, forming the wick, and we expect price to expand away, forming the body. So you have two phases within a candle. I'll make a video on this one day, where you have the expansion phase of the daily candle and the you have the protraction phase of the candle and the expansion phase of the candle. The protraction phase forms the wick. The expansion phase forms the body. We expect the protraction phase of the daily candle to form from these refined key levels. Okay, and in continuation, we're going to use fair value gaps. That's all we're focusing on today, basically, is fair value gaps and continuation and how high probability it is. Okay, so you see the candle opens low in our refined key level, and we expect that to form low day, and then obviously once it expands away, it forms the body of the candle. So now we're going to talk about essentially aligned framework. So this is where you have an overall higher time frame drawn liquidity, right? Where you expect expansion candles away from the reversal to your drawn liquidity. But what is going to support this expansion, these expansion candles, is lower time frame models. So lower time frame models are what forms the low of these expansion candles, essentially. Okay? So you're going to have models inside of models, basically. And that's what we're really doing here. Okay? So once this key level down here is confirmed by a higher time frame swing, we want to trade continuation to this high. But we want to basically align a lower time frame model with our higher time frame model, our higher time frame draw on liquidity. You're kind of aligning two draws on liquidities, essentially. And you can basically time the expansion, right? Because you can't expand forever. Like, we can't expand forever to this high. We're going to undergo consolidation. You're going to undergo retracement. And that's how we can anticipate where those retracements will end and time the expansion toward this high. That's what we're doing, basically. So what's the process? Again, what are we doing? Mark out EQ of the previous candle's range. Looking for a fine key level, which is always a gap. Okay, we got the gap. What do we want the candle to do? Open low into it. What is this? Internal to external. This is a universal model, an aligned universal model. Okay, in higher time frame continuation. Do you guys see how this is a lower time frame model than a higher time frame model? That's what I'm basically trying to show you guys here. And that's the sequence, by the way. You're aligning a lower time frame model with the higher time frame model, basically, using a fair value gap. That's pretty much it. But obviously, we have a lot more to go into here. So what if you're trading the reversal? Okay, so this is important. So if you're trading the reversal, that's completely fine, right? It's just lower probable. So we'll get into like reversals maybe in another video. But right now we're talking about continuation. So how does this continuation even form? It's when price confirms the reversal. And obviously, how are you going to confirm the low of this higher time frame candle? With GxT, an aligned swing. So if this is the daily time frame, we're going to confirm with a 4-hour candle. So when price expands away, it's going to obviously create 4-hour expansion candles away from this daily low here. That's going to make up the daily expansion candle. It's just lower time frame 4-hour candles, right? And that's going to create that expansion away from the key level is creating a gap. Okay. Now, when are we likely to get new phases of price? It's after expansion like this into, basically highs to the left, right? We don't expect price to reverse from these highs to the left because they're not aligned with, this is our overall draw on liquidity, right? Anything opposing to our overall draw on liquidity should be used as retracement. They shouldn't reverse price, right? This is where we expect price to print a new phase of price. It's after expansion, like an intermediate time frame expansion. If this is actually, the daily, when we hit like hourly highs on the 1 hour, 30 minute, whatever, right? We expect retracements and consolidations, like new phases of price, essentially. That's what I'm trying to show you guys. And this is where you're going to wait for a key level to get hit, which is a fair value gap. You're going to wait for a new, universal model, which is IRL, ERL, to align itself. And you're going to time that expansion, that reaccumulation, or redistribution, whatever you want to call it, into this high, basically. So how do we do that, right? After we have the candle closure, simply, what do we look for? A gap. It's the same thing, right? So when we hit this gap, this is now the trigger to end this retracement, right? Once we retrace, we should expand. And now it's just GxT. And how do you confirm the low of this candle? With an aligned swing, right? So if this is the weekly, we use the daily. If this is a daily, we use the 4-hour, okay? And it's the same thing. Now we have a key level down here. What do we confirm a key level with? A swing formation. Once you have the swing formation, what do we mark out? EQ of the range. Okay. Once we have EQ of the range, what do we look for? If we want to trade continuation, a gap within the EQ of the range. So you have the same thing, literally the same thing across all markets. And this is how you get higher probable trades, the highest probable trades. Now we're going to add a time element to this. Okay. So this is how you're really going to put it all together. Okay. So here would be an example of a weekly reversal candle where the week is opening low first into like a range low. How are you going to confirm that? With a daily reversal candle. So like I said, you can trade this, right? You can trade this reversal. You can anticipate it essentially if you have like SMT, and we're not going over the, what we demand at reversals necessarily, because that's would be your reversal video. You guys likely already know. But again, I'll make a video on that. This is more so like how to confirm this is actually this higher time frame move. How do you confirm that? Is with the candle closure itself. Okay. And what we have within the candle closure itself is that gap, right? That's what we want to use to continue from, right? So what's going to form the low of this day? What's the alignment? If we want to go from the daily right? What's the alignment for the gap? It's a 4 hour, okay? Like we mentioned earlier. So we want this day, we expect a continuation, like a weekly continuation. This is like weekly profiling, Tuesday reversal, Wednesday continuation. We want to look for a line key level to form the protraction phase of this candle. We want it to open low into a 4 hour gap if there's a gap here. Form the low of day. What do we confirm it with? A 4 hour swing, right? Now, once you have this previous candle's close, or this closure here, it's literally the same thing you're seeing here, but now intraday. So now we're going to go into intraday price action. So once you have your candle 2 closure at London session, what would that really be? A London reversal. What would you expect 6 a.m. to do? Obviously, it's a C2 closure in London, so you expect a continuation in C3, which is just New York continuation. So it's just, right? We trade into a key level. In this case, it's a range low or whatever, but if you don't catch this reversal down here, what's going to happen? Price is going to expand away from the reversal, because obviously if it's going to reverse, price expands away. That creates fair value gaps. It's going to expand it to something to the left. This is where you get new phase of prices, where we're going to trace how do we anticipate new phase of price. You must be in a key level, right? Wait for that candle closure to confirm it, and we do the same thing. Literally, how do we confirm this wick here with a 1 hour and 30-minute swing point? It's as simple as that. What's the alignment for a 4 hour? If we want to see an aligned key level within the previous 4 hour range, it's a 1 hour and 30-minute gap. So essentially, it's if-then statements. If the previous session reversed, then the next session should continue. What is it going to continue from? A gap. That's simple as that. We hit a key level here, just wait for a gap for continuation. That's really the whole point of this video, guys. It's really simple. So when we hit this key level, again, what do we confirm with? A swing point, okay? And we're doing the same thing. Mark out the equilibrium of this range here. It's a 1 hour 5 minute. I'm sorry, what the hell? It's a 1 hour 30 minute. We're gonna look for an aligned key level on the 3 minute 5 minute within the upper half of this candle's range. So what is that gonna look like? It's gonna look something like this. So this is what I want you guys to look for, really on all time frames, but specifically right now we're kind of talking about the lower time frame. This is going to be the highest probable sequence that you can really have on a lower time frame, and it's essentially just a reversal signature followed by a continuation signature. So what is a reversal signature? It's essentially a V shape. It's going to look like a V shape where we expand into a key level and expand away. So expansion into a key level, reversal expansion. That's all reversal is. It's just expansion away from key level, right? You're going to confirm that with the CSD. So you have the option here to either enter on the first CSD, right? This is going to be, it's going to be high probable for sure. Now the next highest probable sequence would be just waiting for a gap and maybe entering off the gap, okay? If you guys are like traders, like reversal traders, these are your 2 options here. But if you're a continuation trader, you're going to wait for price to engage with the gap and form a order block off of the gap, basically, and you're going to enter that. And this is the highest probable sequence, obviously, because it's continuation. And yeah, this is a lower time frame filter. So we're kind of basically, this is what you want to see in a reversal candle. When you actually look inside of a reversal candle, doesn't matter the time frame, you want to see this V-shaped signature, right? That's what actually confirms the reversal candle. If I look into a reversal candle, it looks like choppy. It's not a reversal. The higher time frame candles lie to you. It's a pattern. So you need to see these things here. So this is what it's going to look like when you can maybe confirming the, a gap or something, maybe confirming the high and low of day, which would be just confirming a reversal profile. When you're confirming the high and low of 4 hour candle within GxT, whatever, right? It's all going to be the same. You're going to confirm with the swing formation, right? You're going to mark out EQ. You want to see this lower time frame signature, okay? If you want to trade a reversal candle, like a C2 candle on the hourly and 30 minute, which you can do, I'm going to show you guys how to do it. We want to see these things, especially the V-shaped signature. That's the most important part, right? If you don't see that, that's your lower time frame added filter. You're not going to engage with price because it's low probability. So now let's get into the next sequence. So we went over everything we want to see. We basically went over gap selection, like how to pick the right gap. It's essentially just within the previous candle's range, right? That's really it. It's basically close proximity gaps to current price, or close proximity gaps to the openings of higher time frame candles. Okay, that's how we actually have gap selection. Because in continuation, just think about it, phase of price. In expansion, we want shallow retracements. So we don't care about gaps that are like way high in. If I'm bearish, I don't want to see gaps way high in premium get hit. I want to see shallow retracements in expansion. So it's very logical. So when we actually have a gap, we want price to engage with the gap, but create a SMT sequence with the gap. And this is why it's so high probable, because what you're having here is a universal model being confirmed by a swing formation. But you guys know me. I don't just trade a swing formation from a key level. I look for two-stage SMT at the reversal. So when you have two-stage SMT at the reversal, and then price creates a gap, right? And then we create SMT in the gap, it's extremely high probable. It already showed you that price is reversing. Because remember, what is a reversal signature? It's when price expands away from the reversal. So this is what price is showing you right now. When it has this gap, it's already showing you that price is reversing. So really, if you have open draws and liquidity, and then you have this gap being hit with an S&P sequence, it is the highest probable sequence you can have. There's nothing else that's higher probable than this. Obviously, you're going to take losses. Like, of course, I take losses. Like, what the hell? But you're going to be fine. Like, I promise you, this mechanical process, like, you're going to win a majority of your trades. So this is the first sequence. It's simply an SMT fill. And no, you do not need two-stage SMT in continuation like this. You don't need it. Because, again, we already had two-stage SMT, or we already had an SMT which confirms the reversal, and we already expanded, which, again, confirms the reversal. So you don't need it. So this is where you simply have one asset trading into a gap, and the other one doesn't. That's a Kraken correlation. That confirms the gap. Obviously, you want to trade this asset because it is weaker, but sometimes it doesn't really give you an opportunity. You can still trade this asset. And again, we're using candle logic or swing point logic. If this wick is small, then you can trade it. If the wick is not small, then you just wait for candle 2 closure and trade candle 3. It's that simple, guys. Let's move on. What's the next S&P sequence? This would be when both assets hit the gap. So we don't have SMT with the gap. That's cool. If you don't have SMT with the gap, you need SMT via swing point. And this is where we have a PSP. So if you don't know what a PSP is, go watch my video. I have a video on it. Maybe go watch someone else's. There's a lot of videos on it, right? So we have the SMT reversal, gap, swing point, SMT, which is a PSP, okay? It's a difference in closes, which is a Kraken correlation in itself. That's when we trade candle 3 lower. And obviously you want to trade this asset because it's weaker. But generally it doesn't really matter, especially when both assets create the same gap. Like, we'll get into that maybe another video, but generally it doesn't really matter, okay? So when to expect a two-stage PSP versus just a PSP? It's looking at the assets that is strongest with the close. So notice how, we're bearish right now, but this asset's closing bullish, so it's the strongest asset. If the PSP itself on the strongest close is like a reversal candle, so see, it's a candle to reversal, typically we don't actually need to go and revisit this high to create a two-stage PSP, okay? But when it closes like this, see how it's also a PSP here? This asset closes a reversal candle, this one does not. So on the strongest close, it is not a reversal candle. This is where you do ideally want to see a two-stage PSP. This is when you can actually anticipate it. So this is the same thing, really, as this, but it's a two-stage PSP, okay? And again, you want to trade this as ideally, but you're going to have opportunities here as well. Now, this is my favorite sequence to see right here, okay? It's the same thing. We get a gap, but this is very specific where it has to be the most recent gap. That's because the PSP has to basically be the candle that creates the gap. So, how does a gap get created? It's when it's a 3 candle formation. So candle 1, candle 2, candle 3. It's where candle 3 and candle 1, their wicks do not meet, which creates a gap, okay? So it has to be with consecutive candles. That's what a PSP is. So that's why it has to be with the gap candle itself that creates the gap. And that's when we create a continuation PSP. So again, watch my video on a continuation PSP. It's essentially just a continuation PSP is following a reversal. So yeah, this is following a reversal in continuation, okay? It's where the candle 3 is a gap, but also a PSP. So one asset is not gonna take out the PSP high, but one asset is, okay? A little confusing if you're new, but I promise, it's like an SMT fill basically, right? Where one asset's not trading into a gap, it is an SMT fill, but it's also a two-stage PSP continuation, right? Or a two-stage continuation PSP, right? So it's very high probable, okay? Very, very high probable. And again, you can trade this asset that's creating a high as well. Especially if markets are like generally pretty correlated, it doesn't even matter. Sometimes it's harder to catch this candle here because it might be super low in the range, or maybe this wick is not really a proper opposing candle. Just trade this asset. It's generally going to be fine. So now we're going to get into asset synchronization. So if you guys don't know what that is, I go over it a little bit in my SMT video, but trust me, I'm going to drop a video on that, so don't worry. This is simply when a leading asset, right, trades into a low first, fails to manipulate it, right, and then the lagging asset switches to the weaker asset to catch up to the low that the leading asset already took out. All right, so it's essentially breaking the SMT, okay, because at one point there is SMT here, so this asset is stronger, but then it switches weaker. And how do we gauge this? It's with some form of SMT fill, or some form of strength switch within a gap. It can look many ways, okay, guys? It doesn't have to look just like this, right? Maybe it's with the PSP. Maybe both assets trade to the gap, but this asset over here closes bearish. That's a strength switch, and this is really high probable, like really high probable. And you want to trade this asset, and you're going to target this low. You're not going to target this low necessarily, or again, we'll go over a video on that later. It really depends on how correlated markets are, but generally you just want to trade this asset into the low that this asset already hit and failed to reverse from, basically, okay? But yeah, this is a strength switch SMT fill, one of the highest probable sequences. Or maybe if you get like a strength switch PSP within a gap, okay? Something like that. It's pretty much either one of those two. Really high probable. Now, let's put it all together. So, essentially, you are going to require some form of SMT at the reversal to confirm the universal model. But once you get the candle closure, what are we going to do? We're going to simply use gaps and continuation. That's all this video is about. Once we hit the gap, you're going to require some form of SMT sequence. And that's essentially it, guys. It is extremely easy. It really is. It's just like wait for a gap after. You don't even have to. Here's the thing. You don't even have to anticipate the reversal. Like, you just let it happen. You let price show you by forming a gap. That's why it's so amazing. It's so easy. This is why I wish someone showed me this a long time ago in my journey, because, like, dude, it's like as simple as it gets. And it's really as high probable as it gets. It's like the best of both worlds. It gives you structure and framework to follow. And yeah, I use it literally every single day. Every single day. So it also tells you, which gaps you're going to use. This is why we mark out EQ, etc. Right? You know what I'm saying? So now let's go over some examples. I have a lot of examples. I assume we're like 30 minutes right now, so we'll go for a little while here. I don't know if we're going to get through all these guys because it's, as you can see, it's 2:40 right now. But let's go ahead and get into it. So yeah, let's get into this one. This example right here. So what do we have on the higher time frame period? Is a universal model. Price expands into external range liquidity. Once we have a closure, what do we expect price to do? To trade back into internal range liquidity. What do we have right here? A discount fair value gap, as you can see. And that's what we can target, right? Just going from external to internal. So what do? Mark out equilibrium of the range. So as you can see, price does hit EQ, but if it does it super early on the day and it opens high first, like it can still, you just want it to reverse around this area, okay? So not a complete invalidation, because you're gonna see we get a two-stage sequence here. To see this gap here, we have an SMT fill with this gap. So this 10 o'clock high, and one thing to preference, guys, or tell you guys about, is that you don't need both assets to have a gap, actually. You don't need that. Some people are going to say that's wrong. Some people do want 2 gaps on both assets, but I don't require it. Because an SMT fill on just one of the assets, for example, like that's just a really strong signature in price, right? If you have a SMT fill where, you know, SMT with this low, for example, with this gap, but the other asset doesn't have a gap, like leaving gaps open in expansion is still a very, very like strong signature in expansion. Like that's what you want to see, honestly. So you don't really need it. So some people say you do. Maybe you do. You know, maybe you want to require that. I don't require it. So I'm just gonna say that right now. But what did we do here, guys? We mark at equilibrium of the previous candle's range. So this is the daily time frame. So what's the alignment? It's the 4 hour. We only look for a 4 hour gap within the previous day's range. So here we have a 4 hour gap. So what's the first step when we engage with a key level, which is a universal model, is how we confirm with the swing point, right? So if you look here, this candle hit the key level, but what does not support? It does not support expansion, right? It has a very large, it trades very far away from the opening price, so it can't be a reversal candle bearish. So this is where we can anticipate a reversal off of this previous 4 hour high, right? And you can trade it because it has a small wick. So this is a reversal into expansion candle. And I actually traded this. I posted this, but I took it on gold. We're going to go over it. Yeah, so we have that with gold here. So you're going to see this 10 a.m. higher here on gold is not even a gap necessarily. Y'all see that? How there is no SMT there, technically. When I go over here to silver, there obviously is an SMT there. So there's your first stage SMT, right? So we're going to get a little bit into 2-stage SMT here. But really, I just want to show you guys the sequence. So the day also opens high first. That's how we want a bearish day to form. What do we have here? A precision swing point. So check this out. This 2200 candle was bullish. What about on this asset? Y'all see how it's bearish? Right, so there is a 2-stage sequence right there. Also, for gold, what I have here, there's your first stage SMT with euro. We get a strength switch. So actually, 2100 is the candle that traded into this level here. So you see how this asset also has a gap here? So remember, 1800 candle traded to the gap. Then we have that second stage crack and correlation here. So that's your strength switch right there. So again, you can trade this now. I traded this, I literally traded this. And I'll show you my exact trade. And I posted this on everything, basically, Twitter, whatever. And I just simply, I don't know why I closed this trade for some reason, like an idiot, which I should not have done. But what do we have here, guys? V-shaped signature. We have the continuation signature. We have gaps. We don't need to hit the gaps, by the way. It's ideal. You can also use lower time frame SMT fills if you want. You just want to see the gaps because gaps show displacement. So I got in a little bit late. I was like in this or something, maybe a little bit lower. So it's like somewhere around here. That was my entry. And for some reason, dude, I just got spooked out. I don't know why I did this. Again, I make mistakes sometimes, but I saw we were in a gap here, guys. We're in a gap over here. I just thought it was going to fail for some reason. And I was seeing that we had this V-shape higher, and then I just assumed we are going to CSD, and I just got out of the trade right here, like literally right there. And then it just melts. Like, I'm an idiot. Don't do this. Don't let opposing periods to the higher time frame spook you out, because they should fail. And that's just a rookie mistake, man, like straight up rookie mistake. I never do that. I don't know why I did it. But I let this go for like 10R, dude. I was going to TP here. Truthfully, I was not going to hold it. You're going to see what happens. It really melts. I was not going to hold it all that low, to be honest. I was going to take the pre-stage low. But let's show you the sequence within this continuation real quick. So this is not even about this example really, but we're going to go over here to silver. So when we form this high of day, what is it going to do, guys? It's going to expand away. We're going to create expansion candles away, which creates what? A gap. Gaps. So if you ever missed the reversal, cool. Trade the continuation. What do you need? basically what do you need to have is only a drawn liquidity open. That's the biggest thing. You ideally want to draw liquidity open to continue towards, basically, right? So here you have an SMT fill. Simple as that. What do we do when we hit a key level, which is a gap here? Confirm it with a swing point. Boom. Go lower time frame. What do we have? V-shaped signature. It's simple as that, right? Take the trade into the low. It's literally that simple. You're going to see later on we even get this little SMT fill as well, because we have potential open objectives, which is the daily gap. I think this is the daily gap right here. Let's look actually, just to show you guys. Yep, that's the daily gap. We still have it open. We clearly failed to manipulate this low. You saw we expand through it, so you know prices can continue. But you got to time. You know we're going to retrace likely after hitting a low. We're going to retrace at some point. We're never going to cap with our retracement from a gap, SMT with it. What do we look for? My stomach is growling. A V-shaped signature. Now, I personally wouldn't take this just because it's so low in the range. But, you know, to each their own. Some people do take that, so I just don't. But that's what we want to see regardless. Ideally, just candle 2 doesn't expand like that. Ideally, it gives us a better entry. But that's going from the top down. Right? Did you see what we just did? We went from the daily candle closure to the 4 hour. Right? Look for SMT in it. Okay, cool. Now we're just trading GxT basically, right? If you trade a model, right? Very good mechanical model. All right, cool. In continuation, this is Asia reversal, London continuation. So again, if the previous session reversed, then it should expand away, creating gaps for the next session to continue from. All right, that's what we have here. Same thing, mechanical process. If I mark out EQ, we're basically just within this previous range here, right? The only reason why it has a large wick is because it's the strongest asset at this point. If I go to gold, it's a little bit weaker, pretty sure. Yeah, I see that smaller wick. That's the only reason. But the high, basically high of this candle is obviously created from the previous range, right? So you're finding the gap within the previous range of the 4 hour candle. And when we hit that gap, you want to see an SMT sequence. Simple as that. And yeah, let's go ahead and move on. So this is actually the previous day. So you're going to see like this was the continuation day right here. But now we're going to go over this day specifically. And first, let's go over the 2-stage sequence. So here's your first stage SMT. So this is how you actually anticipate your reversal candle forming, is when we actually hit a key level. If I want to anticipate a daily candle reversal, we have to like hit a key level. You know what I'm saying? So that's what we have here. We have an SMT. Now, you also get the 2-stage Kraken correlation. So here's your first stage SMT. You get the strength switch. Right? Be a PSP. What did this PSP close? Not really a reversal candle, so what we can expect to take out the high, right? So I actually traded this asset here, mainly because it was just higher in the range. And this is what I mean. When both assets are reversing like this, you're going to see that it doesn't really matter which asset you trade. You're going to see how I managed this. And I posted this on Twitter. These are all trades that I actually took, by the way. Maybe not all these examples, but majority of them. So what do we have here, guys? A candle closure. So here, this is where I'm using other markets. So notice how this candle here is not technically a valid closer. It's not a valid candle 3, basically, because we don't close below here. But when I go to this asset, it is. You see right here, this candle is the same candle. We close a CSD. It's clearly a reversal. This asset has equal lows now at this point. You see these equal lows right here? It's clearly a reversal. Like, use your brain. You don't have to be like that mechanical, you know what I'm saying? Like, when I look within this PA here, clear reversal signature, like V shape. We have the gap, we have the CSD. This is exactly what I entered from, guys. What did I TP? I TP'd when the leading assets hit this low. That's when I TP'd. MCU was a pretty good decision, honestly. I posted this as well, so it's around here. So when I TP'd this, as soon as the other assets hit low, it's around 5R. Really, really good trade. Yeah, that's just going from, you know, a strength switch sequence, right? Expecting a reversal candle. The candle opens high first generally. We get the 2-stage sequence. We get the confirmation, guys. So what are all assets doing right here? They're all reversing at this SMT. Notice how they're all basically expanded away from this high, this initial SMT. They're all expanding away. Look at them. right? If I look at all the assets here, they're literally all doing that. Like, what is ES doing, by the way? Not ES. Silver. Silver, while gold is taking out this high, it's creating a fair swing and a gap. That's an advanced pre-discount sequence, which I'll make a video on. But yeah, so once you basically see all assets expand away from the initial reversal, typically they're all going to get to the same draw on liquidity, right? That typically always happens. You see how this asset got really close to this draw on liquidity? We can form an SMT here and get a new phase of price, but it's likely going to break the SMT. And what are you going to wait for? A gap to form, right? So price expanded away from the initial reversal, formed a gap. We can use this for continuation. What do we want to look for? An SMT sequence. So when we trade into the gap, do we have SMT with the gap? No. Or I guess technically right there we did. Right there we technically did. But you're going to see it doesn't really work. It doesn't work. But what is this waiting for, guys? This is a correlative theory concept. It's waiting for 12 o'clock, basically. Right? So there's ways to time trades and stuff like that. We'll go over it all. But it's waiting for 12 o'clock. And typically, this is where lagging assets typically wait for. 12 o'clock and 10:30. We'll go over that for sure. But basically, we're in a gap. We want to use that gap. Now we're just waiting for a PSP because we don't have SMT with the gap. So you need a PSP or an SMT with a swing or something like that, right? But ideally, it's a PSP. It's just way more higher probable than an SMT just with a swing. That's why I didn't even add the swing, in here. Just wait for a PSP. But what this really is, guys, if I go to the 90-minute candle, now we're kind of going to a little bit some advanced things, but we can do the same thing and use sequential SMT. So you're saying that we have a 90-minute gap, the 90-minute strength switch sequential SMT with the 90-minute candles. Whether you use it or not, it doesn't matter. It's still the same concept. You see how this asset's putting in a higher high? This asset's putting in an SMT fill. So that would be that SMT fill, the strength switch SMT fill basically, right? And this is where you anticipate price to expand into this low. So I just wanted to show you guys that. Also wanted to show you guys how, what formed the low of day here, guys. When I look at back at the previous day's close, let's kind of delete this stuff now. When I look back at the, should I have done that? Oh yeah, I think I'm good. Okay. I just want to make sure. All right, when I look back at the previous day's close, we can expect continuation. Why? Because this asset still has this high to draw into. Right? Look at these equal highs. We can expect price to get this high, but we want to trade ideally, obviously this asset because it's way stronger, it's way closer. But what do? We mark out EQ of the previous day's range, which is right here. What do we look for? A key level, basically a fair value gap and a continuation. This should form the low of day. This should form the low to get to the high, basically, right? And when we get to the high, that's when we got a new phase of price. So what do? We open low into the gap first. What do we form? We don't form SMT with the gap, as you can see. With none of these, with gold, do we do it? No. Okay, so what do we need? A PSP. So boom, that PSP, bearish close, bullish close. That confirms this low to get to the high, basically, okay? So do you see how that sequence worked out there? And that's the same day. You're going to see this happen multiple times this day. What about this continuation? You're going to see that actually continue. So you get a swing formation here, right? So you get the PSP forms a low day. Now it's just London continuation, basically. Right? Mark out EQ of this range. But all you're really doing, guys, is looking for a key level around the opening price of a higher from candle. So when I look at here, like what do we have? This is just simple GxT, right? This is GxT continuation sequence. Within the previous candle, what did we do? We hit a key level and reversed. So the next candle should do what? It should expand, right? Or yeah, basically next candle on the open should expand. If you don't know that sequence GxT, then look at I think it's my last video, yeah, my GxT video. So do we have SMT with this gap? Yes. And a PSP. Right, so that's a two-stage sequence, but again, we don't need that, but we do have it, so it's very high probable. And yeah, how does the lower time frame look here, guys? Let's look. Is there a V-shaped signature? Not really, not initially. I would say this doesn't look like a V-shape, and there's no SMT here. I remember I checked this before the recording. There's no SMT here. If there's SMT here, this would be a V-shape. But you see like how we don't have this strong like V-shape through this low? What price is kind of doing here is just waiting for a new opening of a 4-hour candle and a new hourly candle. So it kind of just messes around a little bit, this can happen because again, this hourly candle can't reverse higher. So if it comes back up here really early on the candle, it can't expand higher, so it kind of might BS a little bit. So what you just wait for, if you see maybe you don't trust the reversal lever, just wait for a gap to form, for price to show you, and let it respect the gap. Let it form that propulsion block off of that gap, right? And then you can trade that. You can trade the continuations. You know, gap here, trade the continuation, etc. We sweep at that low. That's perfect. You know, trade that. Just demand a little bit more if you're not so sure about that. Okay. That's a simple little rule there. So again, what are we seeing, guys? We're seeing the same things happen. You're seeing the same sequence happen multiple times in the same day, because that's how reversals form. That's how continuations form. So let's move on here. So this is going to kind of be talking about the higher time from here. I was going to go super in depth with like most of these days, but I don't think we have time, guys. I'm not sure if we have too much time here. So let's look here. So we have a higher time frame sequence here on the daily chart. So look here. Let's kind of split screen this a little bit. Let's go to YM. Let's go here. So look at this candle here. Okay, I don't want to mess with this too much because I do have drawings here on YM. So let's just look here. So this Wednesday candle is what creates the SMT, and you see how the closure itself is a PSP. Now typically, again, this PSP candle is a bullish expansion candle, so you ideally want to see a two-stage PSP here, but we don't get it. We do get some intraday strength switch here, but basically we have the two-stage SMT, okay? And we have the close here on NQ, okay? We have this close, C2. That confirms the key level SMT, or the universal model. Essentially, just however you see it, you could see it as a couple of things. You could see it as external back into internal, or internal of this range to external down here. Like, it doesn't matter how you view it. If you view it on YM as order pairing ranges, order pairing range high to a low, or manipulation range, whatever you call it, doesn't really matter. But initially, it's just essentially trading back into EQ this range, and back to the low-hanging fruit low, which would be Monday's low, right? This is the first level here, and it's like when we engage, basically when we trade back into like internal range, it's like, how do you know that price is not going to do this to go from internal to external? Well, do we have SMT with the gap? Or are we forming reversal signatures here? If we're not, if we're just ripping right through it, then it probably is order pairing ranges, right? We're going to target this low. And this is where strength switching comes in, which we're going to go over in a minute. But so what are we going to do, guys? We're going to mark an EQ of this previous range. And what do we expect price to do? Right? Now let's think about it again from a fractal perspective. Okay, if we have a higher time frame, reversal and draw liquidity, we're going to expect daily expansion candles away from that level. All right? So what's going to form the high of the day of these expansion candles in the daily time frame is 4-hour gaps. But when we actually print multiple expansion candles in the same direction, we're going to create daily gaps. Okay? That support higher time continuation. See how it works? It's the same shit over and over, right? Sorry, I didn't mean to cuss, but let's look back in the previous day's range here. Let's kind of delete all this stuff. Let's look back in the previous day's range here. What do we have within this wick, guys? Is a 4-hour gap, right? This is where you want to see an SMT sequence, which we actually don't have. We don't have one here. So this is where you just wouldn't really trade it, maybe. Here you do get a nice sweep, though. I will say that. You do get a nice sweep. So again, if you don't have, for me at least, I require SMT, guys. That's just what I require. So if I don't have SMT at the very reversal, I just don't trade it. What do I wait for? A gap. I let price show me that it's going to reverse by creating gaps in price. So if you go on YM, it's a little bit weaker, but this could have been a potential opportunity. This gap here. What do we need to see? An SMT in the gap. You have a gap here, but on YM it's way weaker. Like, remember, this is stronger, but wait, where are we at here? Yeah, we're here. This is actually stronger, but now we're actually weaker this day. This is how I anticipated this reversal from this expansion. We're not even going to go over this trade, but we'll go over one of these other trades. So again, like this gap can be used. If you have some form of SMT sequence, this gap can be used, right? This gap can be used, which is what I took later in the day. Let's go over this trade real quick. We're not going to go over my first trade. We're just going to over this one real quick. So you have SMT with this gap here. So this here is 830 high. Let's go on ES. 830 high, which would technically be up here, but you see how this gap is not filled here? We'll just use that one. So there's an SMT with that gap, with YM, right? And there's a PSP right here. So you see that's a bullish close and a bearish close, but you see how these markets are decoupled? This asset is really expanding lower right now, as you see. And then this asset is just consolidating. It's just like retracing, right? So these assets are expanding into lows right now. Well, this one's in deep premium of the range. This is where this is decoupling basically. This is where you see strength switch happening. So in order for a new sequence, in order for a new phase of price typically, you want to wait for this asset to switch strength basically, right? So that's what we're going to see. That is when we create retracements. When we create retracements, assets sweep highs out, they trade into gaps, and that's the trigger, right? So that's what you see here. This high right here, or this SMT is just a retracement on these assets, right? So you see this move opposing to the draw. How would we know that this is likely going to work out? It's because the draw liquidity is still left open. This is Sunday. This is Sunday, the current week's low. That's like the very easiest draw liquidity of all time, right? That's not going to be the low of day or low of week. This week opens high first. Remember, we have that daily sequence. Very high probability we're going to get here because price has shown us that it has reversed. It's creating gaps. We're holding the gaps. Now we're creating equal lows. I mean, come on, dude. We're hitting that. We're absolutely hitting that level. So if you look here, what forms the high? So now we're trading intraday continuation. Pretty much what we're doing is trading off of the previous 4 hour range. What's in the previous 4 hour range is the gap. It's these gaps, basically. And this is where we get SMT, 2-stage SMT, via consecutive candles. See this consecutive candle SMT, which is a swing point. And now you get the strength switch PSP. So notice how this candle is bullish. YM is bearish. So this is when I still traded this asset being in queue. It's because we still have this draw liquidity. We're so close to draw liquidity that I still want to trade it, right? And this is what I took. I posted this. What do we have here, guys? V-shaped signature gap. Doesn't matter the gap, how big it is. It's the V-shaped signature, really. And that shallow retracement. In expansion, we want to see shallow retracements. This is why you can trust this. These small opposing candles. As long as you get in before we take out the draw liquidity. That's the main thing, guys. And yeah, I took that trade and I posted it. I even recorded this for Lynn's members. Yeah. There's about 4 right there. And I did take a loss this day, by the way. But again, losses don't matter. I took a loss on the same sequence, basically. It was just a 15-minute sequence. It was a 15-minute SMT fill. So you're going to see at one point, there's actually an SMT fill here at one point. It just failed. I just lost a trade. Boo-hoo. Losses happen. You're literally going to take losses with this sequence, obviously. With no model has a 100% win rate. But I'm telling you, over the long run, losses don't matter, dude. RR, as long as you have a decent amount of RR, dude, you don't even need a high win rate, like a 50% win rate. Decent RR, like seriously, that's realistic. Don't be thinking you're going to have like 80% win rate right off the rip or something. It's just not achievable, okay? So that's the sequence here, guys, and I'll show you the strength switch SMT fill here. So you're going to see, man, I could show you guys. I could show you so many days because it happens so often. I can show you this day here and the logic for it. We're just going to be here for a long time. So you have an SMT here at the low. So you can anticipate a reversal candle for 2 reasons. It's because we hit a key level with SMT. As you can see, that's one reason. But it's just a weekly profile. It makes sense to cap off its weekly range here, dude. Because the weekly wick size. Look how large it is. Very large weekly wick size. So you know it can't expand past the open. You know it can't really expand past the weekly open very far. So this is the perfect area to cap off the weekly range. Another reason why is because we're very overextended. So when you have the previous day expand like this and then you continue the previous sessions, very highly likely you're gonna get a New York retracement. Even if the previous day doesn't expand like this if just the previous sessions expand in one direction, because you're not going to expand in all 3 sessions. You're going to get a new phase of price. And that's just phase of price like 101 really. And here is just a 2-stage SMT, guys. So again, I posted this too. I took this as well. And this is a 2-stage sequence at the lows. What do we get in the lower time frame? V-shaped signatures. Go on the 3-minute here, you can see a little better. We're forming gaps. We're respecting gaps, so respecting order flow. This is an expansion signature. Again, small gaps here, right? Gap there. This is the sequence that I want to see, and this is the SMT, by the way. This is the strength switch SMT, which is creating a 4-hour 2-stage PSP. You guys can go study this and journal this. So notice how this candle here is bearish. On NQ, it's bullish, right? And we do not take out this low. You'll see that? And now I'm going to show you the second trade that it took is a strength switch SMT fill. So when are you going to require a strength switch? Is when the leading asset trades into its drawn liquidity. That's when you require it. So notice how NQ trading to this high. What do we have right below it? A 15-minute gap. So I use 15-minute gaps too in expanding markets when price is really expansive, right? Really volatile in one direction. Typically, it's going to form like the low of like 1-hour candles, for example. All right. So because when I look here, what am I really trading right now? Here's candle 2, here's candle 3. I'm trading candle 4. When you expand in candle 2 or candle 3, you usually don't want to trade the next candle, because again, you can do phase of price. So I like to use 15-minute gaps in that scenario. What makes up these expansion candles is 15-minute expansion candles, which is 15-minute gaps, basically, right, from the previous range. I mean, that's all we're doing, right? We're doing the same thing, dude. You can't make it up. Previous candle, what do we have in it? Gap. All right, strength switch. That's what you need if you want to trade lagging asset. Notice how they both expanded away. Look how close it is. Typically, they're both going to hit, especially the middle asset here. It's a little bit different when it's coupled like this with YM. But what do we have here? SMT fill. That's what I trade on. That's it. Exactly how it is on my slides. I mean, it's all mechanical. It happens the same every single time. What do we have here? Strength switch PSP. Bearish close, bullish close right here. So I took both of these trades. I just took this trade here, the lagging asset, the weakest asset, to the gap. That's what I trade to. And I just want to show you guys that. That's kind of trend. But now let's go into this here. This is what I really want to show you guys on the higher time frame. So what do we have here? So notice how, again, it's like, this is how you filter out SMT, because some people are going to get faked out by this. They're going to see this as an SMT here, and then a strength switch. When I look at YM, notice how this asset is the one that created the higher high, so it's stronger technically. We have a bearish close. So you think it's a strength switch where NQ has a bullish close, so you think it's going to, reverse high or something. But what did they do at the initial high? What did we do up here? They all expanded away. You see that? They all expanded away. So this typically means they're all going to hit the same drawn liquidity. It's the same logic I just did on ES, where they all expand, like ES and NQ expanded, and ES is really close to that drawn liquidity. It's typically going to get there. So when do we look for a strength switch sequence? Is when the leading asset hits the drawn liquidity. So this is where NQ hit the drawn liquidity. Exactly when I want to see a strength switch. So this is where we can get my favorite model, right? Which is a PSP SMT fill, right? For basically YM to catch up to that low. So notice how this is a PSP here, and we trade to the gap on this asset. We get that SMT fill to break the SMT. Isn't that crazy? Pretty cool, right? So yeah, that's a great example there. I actually traded this day too. Yeah, I did trade this day. Because of that, so the day open side first, but also we can already anticipate this SMT forming, right? You would anticipate NQ to trade into the gap, obviously, because it has the previous day close. But what do we do here? Like, to get to the gap on the daily, you mark a equilibrium of this daily close, right? What do we have within it? A 4-hour gap, dude. It's crazy. You have a 4-hour gap. So what are you trading? GxT to reverse node expansion candle, right? How do you confirm the low of this gap? You either want to see SMT in the gap. In this case, we don't have it. All assets trade to the gap. So what do you wait for? A swing formation in the gap. And you need to see some type of SMT sequence. So you see this candle here? How it hits the gap? And it basically confirms the low of the 4-hour candle. And this candle over here is bullish, and this one's bearish. See that? That's the PSP. There's your sequence. So now what do you need to see? That lower time frame reversal signature, V-shape. V-shape signature. That's what confirms it. I wish I was freaking watching this. I would have absolutely taken it. You get your gap here, your CSD. I mean, perfect. I mean, that's perfect, bro. And I've been trading Asia. I took Asia today. I wonder if I'm logged in on TradeAV. I'll show you. I already posted it, but yeah, this is something you could take into the gap. Something like that. 2R, whatever, right? My God, it's taking forever, dude. Asia session be like, especially on indices. All right, we ultimately get there. It took a little while to London session, but we got there, right? And that would be to basically trade the manipulation of the daily candle. It's very logical right there. But I took this. Sorry, I got a little bit off topic here. But what do we do when we hit this? When we created the SMT, guys, what do we do? We expanded away. That confirms the SMT. That is the reverse signature I'm talking about. The fractal nature of what we're talking about. Now, the only thing that I don't require, guys, necessarily, is for example, like this is a daily model here. So the alignment would be like daily, hourly, technically, to see the V-shape and the CSD and the gap. But I don't have to wait for that to form. I can trade the reversal. Now, if I want to trade continuation, that's what you're going to want to see, okay? So if I want to trade continuation, guys, what am I good for? We already know, gap, right? Ideally, though, I will say, I wish it was this gap. Like, it would be better if it was this gap, I'm not going to lie. Like, you want more closer proximity gaps. This is kind of high in the range, but it's slightly okay. Here's why it's slightly okay. It's because we hit a low. So this can be a deeper retracement, because this can be a new phase of price. But if we didn't hit that low and we went really high in the range, like that's not something you want to see. But do we have SM2 at the gap? Yeah, we do. Which is right there, 5 o'clock. Wait, am I capping? Hold on. Is it ES? Oh, it's ES. Sorry, it's with ES. There, boom. So we have that, but we don't have technically don't have a closure here. But we do on YM. So see what I mean? Like you can use other assets to confirm it. All I need to see really is I need to trade an expansion candle away from reversal. Like that's what you really want to see. And then I want to see that reversal signature. So what I want to see, the V-shape, right? So I'll see this V-shape signature. What do we create? This gap, I also took this, I posted it. So when we hit this gap here, kind of bullshits a little bit. There's an SMT here, SMT fill. And then we get the 3-minute close here. That's what I took. It was a little choppy for a little bit, for sure. But yeah, that's what I took. Into, what low was it? I think I just took 2R, yeah. I think I just took 2R. Yeah, it was that right there. Just simple as that, really. It dropped a little bit, but then it ultimately got there. And that was my trade right there. Because I knew it was going to be decoupled. It was going to be pretty decoupled. Like, look how close YM is to these lows. So when YM hits this low, it's like NQ is super high in the range, which is, you're probably going to get a reaction. Some sort of like new phase of price. But yeah, that's example there. Just going from the top down there. I think we're just going to stop with NQ here. Let's move on to a loss. This is what I took yesterday. So you're watching this on Friday, like super early in the morning. I took this Thursday, a loss. Let's look at the sequence. So SMT with the previous low. So just looking for a new phase of price potentially, right? So this is the SMT here. Now I know this is likely retracement for 2 reasons. For one, we're leaving these equal lows, right? We're really deep in this range. We're probably going to take it. But also the weekly candle. The weekly candle does not support a bullish move higher. So this is what I want it to happen. I was going to ping pong this, dog, like if it happened. So if we did this, so you see how this wick is really small right here? How this wick is very, very large. even before we had this move lower, it was very, very large. So we know that price cannot, if it reached this high, which is Monday's high, or Tuesday, or is it? Yeah, Monday's high. When it reaches that level, it's going to create S&P with YM. And we know it can't expand past the opening price, of this week. So this is how we would time this retracement to be over, is with this SMT with this high. But we didn't really reverse off of anything, so unfortunately, right? But when I see this sequence, it's very, very nice, dude. Like, I don't care if it's a loss, it's so clean. So I'm going to show you how you can use 4-hour gaps in continuation. And that's only when Asia is a low day. Because what you're basically going to have is price expanding right off the opening price of the daily candle. And you're going to create 4-hour expansion candles away from the low of day, which creates 4-hour gaps, right? So we have this. We don't have SMT with the gap, so we get SMT in the gap to confirm it. If I show you YM, YM takes out that low. So that confirms it, right? So again, you're going to confirm the low of this 4-hour candle with a swing formation, or you're going to confirm the low of this basically 4-hour candle and key level with the swing formation. So here's a swing formation, right? So you can trade it if you have the V-shaped signature. Do we have it? Yes, we have a little gap here. You have the, we're expanding away. That's good. But when we expand away, remember, when price expands away from the initial reversal, it creates expansion candles, which create gaps. It's a very, very small gap. But if I was awake, I was not awake for this, for NIP. If you see my driver video, you already know. We want the driver to hit these fair value gaps in reverse price. And this is where YM hits this gap, or it trades into this candle's low. So basically what we have is reversal prior to the driver, expansion, a drawn liquidity open, which is super clean, which is aligned. Remember, this drawn liquidity is aligned with this drawn liquidity. This is what I mean. We're aligning lower time for models with higher time for models, right? So this is what the driver trades the gap, has SMT with it. Super clean. Like, this is something you could definitely trade right here. Like, just take on the gap or something, because this closes a little bit high. So you'd probably want to demand a retest. You don't get the retest just if you create a gap. Just enter from the gap. Put your stop loss hit the body, and this is a good trade. Take it like that, right? But I'd wake up at 9:30 here, and again, what am I basically trading? Continuation. So this 4-hour candle is already an expansion candle. So this is GxT aligned sequence, right? We're just going to create new swing formations with an already existing 4-hour expansion candle. We're going to trade swing points from gaps. So this is my favorite model, by the way, where this 9 o'clock candle is bearish and creates a gap, which is a PSP. So 9 o'clock here is a bullish candle. So you guys see it, right? My favorite model, by the way. This happens at 9:30. So obviously, again, it's the same thing down here. Literally the same thing happens back to back. It's just not a PSP sequence. I want the driver to trade the gap in reverse price, right? This is what we get here, 9:30. Like, bro, I'm taking this every time. Like, what? Literally taking this every time. Here's the SMT, the CSD. I think I enter here, by the way. So I enter on way up here, which to me the stop loss is too big. So that's why I put my stop loss here, and I lose because of that. It literally wicks me out to the T and then goes a little bit higher. I think it comes back anyways. Yeah, it comes back anyways. Yeah, it wicks me to T there, sorry. But that was just to create SMT at this low for whatever reason. Like, NQ wanted to basically take out this low here, which causes ES to retrace, which causes me to lose because my stop loss is not on this low, which it probably should be, but that's how I put my stop losses sometimes. So it is what it is. I live and die by it. So I take a loss there. That's all good. So it's still valid to enter. So I just enter up this one, this CSD here. And I'm thinking this is going to rip at 9:30, by the way, because typically if you have an open draw like this, the profile is super clean in my opinion. I think this is good going, dude. And it does go for a little bit. Like, this is it could be a winning trade for sure. Like, it goes 2.3R. This is probably a winning trade for a lot of you guys if you just target 2R. Or maybe partial. I didn't even partial here. I didn't even go break even. I usually go break even, honestly. I just didn't do it there. It's like a discretionary decision. I just thought it was too high probable not to get there. And yeah, you see it takes me out, and then it goes higher a little bit. All right, and then it just BS's and reverses off of like kind of like nothing. But if you look here, guys, let me show you something here. We're gonna go to RTY. And I didn't even look at RTY, bro. I was too busy looking at this. RTY actually does trade to the gap. It literally does give us that logic. Right, look at the weekly candle. It's just creating a new high of week here. SM2 with the gap, and you get a strength switch, bro. I don't know what I'm saying, bro, but get a strength switch on the 90-minute. It's a, which is even higher probable, obviously, right? So, sequential SMT strength switch. Look right here, 9 o'clock does not get taken. What about on YM? Boom, it does get taken. So it's like, bro, I would have so taken that, bro. It is what it is, but we can trade. What can we trade, right? We can trade continuation. You typically can trade that. But again, I was streaming with with the lens, so I missed this as well. I was doing a lecture, so wasn't even on the charts really. Actively looking, but this is a strength switch because, again, what are all assets doing? They're reversing, so typically they're all going to get the same low here. So notice how YM took out this low, failed to reverse, and it trades into the gap here. This is the gap right here. It trades into the gap when it was previously weaker. This asset has an SMT fill. So again, you can trade this as a lagging asset into the low, and that is your new swing formation essentially, right? That you'd be waiting for in a sequence. Do you see how it's the same thing every time? You just can't make it up. It's the most consistent logic ever, like honestly. It's kind of crazy. I'll go over this one too. At this point, I'm just showing you everything. Here's a good one. Again, daily. It's just daily model here, right? Manipulation of the range high. We get some form of bullish candle here. We know it's likely going to be a retracement because like what are we reversing from? If you come this deep in a range where you didn't find support internal here, you're going to go to the external range as a drawn liquidity typically. So this is where you kind of just open up the week here next to Friday's high, and then we just reverse off of it. So Monday reversal, really? So we're going to look within this reversal candle. What do we got? Gap. So notice how we're opening in the gap already. Okay? We're opening in the gap already. Look at YM, the correlated asset. SMT fill already. So what do we have here is the two-stage PSP sequence where you have an SMT with a gap and a PSP. So what can you expect a two-stage PSP to form? I actually took this and uploaded it as well. So these are all trades that I take. I actually trade this stuff, like, and yeah, I'm not just like selling you some shit. It's all free. No reason to lie to you. So what do we have here, guys? V-shaped signature. So again, if I'm gonna take an Asia positional entry like this, I'm gonna use like basically if I have a higher time frame draw liquidity, higher time frame confirmation, like especially Asia, I'm just gonna use a higher time frame. I guess what do you call it? Confirmation. So there's no reasons to go lower time frame here when I can literally enter off of the 30-minute and get 7R basically. I forgot where I enter exactly. Dude, it might be even up here. I don't even remember, dude. But it was a very good trade. You can go look on my Instagram or X. You can find this. It's 3rd of November. But yeah, I hold this position overnight. And yeah, it's really clean. So again, when Asia is the high of the day, guys, when Asia is high of the day, you can use a 4-hour gap for continuation. And I'm pretty sure I took this on NQ. Yep, I did. So I murdered this day. I took NQ here. So there's no SMT in the gap. See how, okay, there technically is. There's SMT like with this high, technically. But you get 90-minute sequential SMT here. This is what I mean by timing trades, timing reversals with quarterly theory. Whether you believe it or not, I've seen it too many times. It's pretty good. Here you get right here, wait for 10:30. That's when 10 a.m. reverses, right? You're gonna see YM takes it out, ES think takes it out as well. Yep. And this is when the market reverses. So again, what is the thing we look for to confirm this? Is a swing formation. In this case, you have to view it kind of as like technically a candle 3 because again, it's like GxT where the previous candle hit the gap, but it also closed the reversal candle. So this is like continuation, but technically this is not the reversal. It's actually this candle's reversal because the other asset's manipulated. So either way, it doesn't really matter. It supports expansion. The current candle you're trading supports expansion. That's what matters. Oh yeah, you are trading a reversal candle hourly, so it doesn't matter. So here's the SMT. Like, what do we have? B-shaped signature, right? So you could enter this first here. Really should have, but I didn't. I again just waited for a gap. CSD. I mean, it's that simple, right? So this is my trade into these lows. I don't know where I targeted again. I don't remember like where I TP'd and stuff like that, but probably here. I was saying. We'll just do it for the video. Probably there. I'm pretty sure it is, and that's really it. Right? Pretty simple, right? And let's get into some more, a little bit more. And we're gonna really need to wrap this up pretty soon, guys. We really do. So, what about over here? Weekly model on the higher time frame. So we're manipulating the range low. Again, do we have SM2 that's low? Let's check. I think I've had this open the whole time. If I did, I'm sorry. Do we have SM2 the low? No, I don't think. Hold on. I don't think we do, if I remember. Yeah, there's no SM2 at the low, I don't think. So if there's no SM2 at the key level itself, what do we look for? PSP. Here's a weekly bullish candle. Bearish candle. See how it closes more of an expansion candle? It doesn't close back inside that candle. That's where you get a 2-stage PSP. So what are we going to do? Within weekly expansion candles, we're going to look for daily gaps to support price higher, right? So you see all these gaps here? The gap here. Just SMT with like previous candles lows, like this one. That's what we're going to be using, right? So the draw liquidity is still open. So this is what I took. I also posted this. So this is a continuation PSP, 2-stage PSP, because we're in continuation, right? We're in expansion towards the draw liquidity. This is where we anticipate this to happen. So this candle here, guys, is bullish on one asset. See, that's bullish, and then we close, or we don't take that low out, but over here we do, right? So now we get a closure to confirm whatever this retracement is, to basically in the retracement to expand again. That's how we're timing expansions. It's with essentially with SMT. So the key level here, there's no key level on daily, but this previous is low. It's simply a 4-hour relevant low, as you see. So we're manipulating this relevant low. We're going to target this high. So what do you guys see here? So remember, it's a fractal concept. If this is like a higher time frame reversal, and I want to trade a continuation, what are we going to wait for? We're going to wait for the price to expand away. So remember what happens when we hit opposing highs and stuff like that? When we expand away from initial reversal and hit opposing highs, we're going to get new phase of price from a fair value gap. So that's all you're going to wait for. So this is where I literally enter from the gap. So this is the daily close. I put a limit at the low because I know that price hasn't reversed from the gap. It has to sweep this low out at least. And I put my stop loss on the gap low itself. And I TP here at the previous high. Right. I take a positional entry here because we have the SMT, we have the reversal signature. That's the confirmation. I don't even need to trade anything else. Like, we're opening near the level. So when you open up near the invalidation level, which is a gap or something, then that literally, you can anticipate Asia reversal or London reversal, right? Because you can expect a New York reversal because, I mean, if we're opening near that key level, then that would mean that Asia and London just consolidated in the key level. We want price to hit the key level and expand quickly. We also have a 4-hour gap here as well, by the way. So either way you look at it, I'm just looking at it on the hourly. It looks a little bit cleaner, and I can put my stop loss here. Whereas like on here, I have to put it like way down here, which is not so necessary. Anyways, we'll do one more. This is insanely long. It's actually ridiculous. But here, what do we have? Potentially weekly, basically external to internal, right? So the previous week reverse. So what are we gonna do? Mark out equilibrium of the range low. So ideally, want to see this week do what? Open low into a daily gap. That's the alignment, and go higher. So you're gonna see how this week forms. So I think it does hit the gap like here. It already hit the gap, I believe. But yeah, it did. but essentially we form SMT with a key level. So we have like this V-shaped signature, you see that? From the previous candle, that's kind of confirms it. But now we hit this aligned gap here, and you have a two-stage sequence here. Let's show you DXY, or not DXY, Euro. So say we don't trade into the gap, you have an SMT fill and a PSP here. So they have a two-stage PSP there, so, or a two-stage SMT, sorry. So now, see how it's the same thing, but now it's just on the daily. Now you can expect this next day to expand. And when I go to lower time from here, we have a news event at 2 o'clock, and there is no low of the day printed, right? This clearly is not a reversal signature because this deep retracement. So what do you want to see? This news event right here, manipulate this low to pair it with the driver. So what do? We manipulate the low at the driver, perfect. Then we also create SMT with that low. Perfect, right? What do we have here? Do we have a V-shaped signature? Yes, V-shaped signature. Gaps, that's what we want to see. But when price expands away, right, what's going to create? Gaps. Now, when the leading asset trades into objectives, what do we look for? Strength switch. So Euro trades into objectives up here. You're going to get a new phase of price. Where is that phase of price going to be capped off from? Gaps. How do we confirm this gap? With a swing formation, right? Or an SMT sequence. So here, this asset's going to trade into the gap. Again, it's the most recent gap, by the way, from the previous 4-hour candles range. See that? The previous 4-hour range. So boom, we trade the gap. Does the other asset trade the gap? No, it doesn't. Which is what? A strength switch. Because this asset hasn't actually reached any draw liquidity. It hasn't even hit the previous high, or whatever highs these are. So that's the strength switch, and that's the trigger for, again, expansion. And you want to trade this asset here. As you see, we get there. So that's going to wrap it up today, guys. I really hope you guys enjoyed something or learned something here. I hope you find value in it. I promise if you study this video, study my content, put it all together. I try my best to put it all together for you guys, but I can't do it all for you. Yeah, just continue to watch these on repeat and you will learn. And yeah, I really wish the best for you guys, and I'll try to put out a video at some point when I can, guys. And hopefully this wasn't too long. Hopefully you guys are okay with it being so long, but yeah, I'll catch you guys later, and you have a good one and stay safe.